Welcome to the ICAEW Insights podcast.
Hello and welcome to the ICAEW Insights podcast, where we analyse the latest news from the world of accountancy, business and finance. I'm your host Tom Herbert, and in this episode we take a look back at the year in accountancy and ask, will 2022 be another year of calculating EBITDAC? We put the Government Tax Administration and Maintenance Day under the microscope, and we're joined by the Executive Director for Audit Services, Audit Wales, to find out how the local audit market differs between England and Wales. Now, as is customary for podcasts at this time of year, ICAEW Insights will start the show with a fleeting look back at the year gone by and indulge ourselves with a quick scan of the horizon for 2022 and beyond. And I'm delighted to say I'll be doing so in the company of Philippa Kelly, Director of Financial Services at ICAEW. Hi Philippa.
Hi Tom, thanks for having me.
It's a pleasure. So, when we were discussing topics for this part of the podcast, one thing that caught your eye was the roll-up of our individual decisions and the fact that we're all asset managers now. Can you expand on that a little bit, please?
So one of the things that it has been great to see over the course of 2021 is the increasing awareness of climate change, climate risk, the impact that that has on businesses, on individuals, and actually some of the progress that we're starting to see from businesses in terms of working towards net zero and that transition. But one of the key publications this year was also the Dasgupta review, which looks at the economics of biodiversity. And I think what that really underlined for me was that climate change is only the start of the story. And actually, then we need to shift to looking at biodiversity, nature as a whole, and it just becomes even more complex. So whilst we are making good progress and we're getting our heads around things, actually there is more to come. And in that review, it states quite early on that we are all asset managers pretty much all of the time. So it goes on to say whether as farmers or fishers, foresters or miners, households or companies, governments or communities, we manage the assets to which we have access in line with our motivations as best we can. But the best each of us is able to achieve with our portfolios may nevertheless result in a massive collective failure. And that really struck a chord with me when I was reading the review and when we spoke to some of the people that worked on the review earlier in the year. And as the year's gone on, there's been more and more examples where I think this has come to life. So, for example, when we were speaking with people working in and around the insurance industry, we got on to talking about the topic of electric cars. So something that we are seeing more and more of, obviously a good decision to make when you're thinking about your next car, but actually one of the consequences of having an electric vehicle is that you need somewhere to charge it, right? And unless you live in a town or a city where you've got lots of charging points, you're probably going to need to charge it from your house. So what does that mean? That means people are probably paving over front gardens more than they have been in the past in order to be able to charge their cars. And that might only take away, in your mind, perhaps a small patch of grass or a little hedge or some pots and some pebbles. But actually there's a collective impact of that as more and more people pave over their front gardens, because it impacts drainage, it takes away those little habitats for the beetles, the bugs, the bees, and all of those things can have an impact on biodiversity as well. So as we start to consider all of these things more, I think we will increasingly be confronted with these trade-offs that we're making in our own life. So I'm making a good decision to buy an electric car perhaps, but because I need to get it right outside my house to charge it, that means I'm taking away a little bit of nature that was in my front garden. And I think we're going to probably have to embrace more and more of those tensions as we make decisions in terms of being those asset managers pretty much all of the time as we move forward.
You alluded to it just then, but I think you conducted a special podcast interview with one of the people who worked on the Dasgupta review, which keen listeners can find on this feed. So another thing you mentioned was greenwashing and the potential enforcement approaches to it. What's happened so far with this in 2021 and what could be on the cards for next year?
Yeah, so I mentioned earlier this real acknowledgement of climate risk, this desire to be able to invest in greener assets and to use our finances for good, whether that's pensions or the type of loans that companies can get to help them with that transition, and lots of greening of financial services out there. But the risk that comes with that is greenwashing and also green wishing. So the FCA's defined greenwashing as marketing that portrays an organisation's products, activities or policies as producing positive environmental outcomes when that's not the case. And as we are in a period where we're seeing lots of innovation in this space, the standards, the rules are still evolving here. Actually, it's quite prevalent for those claims to be made and for language like sustainable to be used, when actually we can't all agree what that means. And there are good reasons for that, because it might differ by industry. The impact of that is quite challenging to measure and to hold someone accountable for. So when we're looking at where we might save our money, or if you're choosing funds as part of an ISA, you might see the headline claims and think, okay, this looks good, but actually what's underneath doesn't quite live up to that title. And the FCA have made it quite clear that Principle 7 of their principles for business apply here, in that firms have to pay due regard to the information needs of clients and communicate information to them in a way which is clear, fair and not misleading. So whilst the regulatory response to greenwashing is evolving, the FCA's ability to do something about it is already there. So, for example, we might see passive funds that have an ESG related name, but if they track an index that doesn't itself claim to be ESG focused, then that might be misleading. Or if you've set out an investment strategy to invest in companies that contribute a positive environmental impact, but those companies don't necessarily obviously contribute to net zero transition, that might be misleading. So I think as we get more and more information about this, and then there'll also be an increasing need for assurance of some of those claims, and not only for those firms to be looking at the claims that they're making more carefully, whether that's around green or other ESG factors, but also as savers, as investors, I think to be aware and to look beyond the title when we're looking at those products.
Can I ask a quick supplementary question around the difference between greenwashing and green wishing?
Sure. So greenwashing, I think, is per the FCA definition where you've claimed an impact that isn't there or an outcome that isn't there. I think green wishing is probably what we're seeing in terms of a bit more embellishment of perhaps overstating something, where you've got really good intentions and you're making those steps, but you're just not quite there yet in terms of how green you are or how socially responsible you are to make those claims. And this is definitely a journey for people. And one of the challenges, whilst there is so much enthusiasm and noise around this at the minute, is to perhaps make claims that are a bit outside of where they should be, even if they're not entirely misleading.
Now, this is an accountancy podcast, so I think it's only fair that we trot out at least one alphabet soup abbreviation. The big one this year is EBITDAC, which first emerged in 2020, but this year has been presented by a number of listed companies in their annual results. Can you first of all tell us what EBITDAC is and why it's important?
EBITDAC is earnings before interest, tax, depreciation, amortization and COVID-19. And as we all know, so many businesses have suffered a variety of impacts during the pandemic. And the information that investors or other users of businesses' accounts or information need in many circumstances is to understand, okay, back to the fundamentals of everything that's happened over the past year. What are you attributing to COVID versus what is a change in the fundamentals of your business for another reason, whether that's for upside or for downside.
And to borrow a phrase from the good folks over at BDO, it was included in a blog that they'd written, but is EBITDAC a slogan on a mug, or is it a genuine valuation driver? And do you think 2022 will be another year of calculating EBITDAC?
So I think from where we're sitting at the moment, I think we will be seeing those calculations again. I hope it's not an enduring metric, but it does give useful information for some businesses just in terms of what they're presenting and how they are communicating in a meaningful and understandable way with the users of their information. I think what people are planning, whether that's forecasting or looking at that model, looking at financial models that they might use is still very much in flux. And one of the longer term questions is actually, what do we do with the data that we have from these pandemic years? So this is something that the financial services industry is thinking about. So how do you use that customer behaviour information from 2020, 2021 and perhaps part of or all of 2022 when you're looking at financial models and trends and how to predict things like probability of default? There are different schools of thought on that, and I don't think we've got to the answer yet. It doesn't seem that omitting it would give us the right answer, because there have been structural changes around that might endure. But at the same time, obviously, it's not hopefully going to be reflective of the way things are going forward.
Thank you very much, Philippa. Now, I will be stepping down from my hosting duties on the ICAEW Insights podcast after this show, but don't worry, it'll be in good hands as Philippa will be taking over the hosting from January. It's been an absolute pleasure to host the podcast, and thank you to everyone who listened and to everyone who took the time to get in touch. And it wouldn't be an ICAEW Insights podcast without an update from the world of tax. And today I'm delighted to welcome back ICAEW Tax Faculty's Technical Editor, Lindsey Wicks. Hi, Lindsey.
Hi, Tom. Good to be here.
Delighted to have you back. Now, let's start with the government's Tax Administration and Maintenance Day, which we build on Insights as a budget without a speech. Firstly, could you start by explaining what Tax and Administration Day is and why it's important?
Of course. The day follows on from the 10-year tax administration strategy that was set out by the government in July 2020. Tax Administration and Maintenance Day, or TAM Day for short, forms part of the further steps the government is taking to further progress tax simplification, tackle non-compliance, and ensure that the tax system is fit for the modern world. In 2021, we've not only had two budgets, but two events where we've had a command paper accompanying a raft of consultations. So that's why we said it's a bit like a budget without a speech. So the first of these two events was Tax Day in March. On Tax Day, we saw the launch of a call for evidence on the tax administration framework. Now, that was a big call for evidence covering all kinds of administration. On TAM Day, the government published a summary of responses to that call for evidence, setting out if and when the government intends to take matters forward. And the summary of responses also promises a roadmap for future consultation as the government's 10-year vision for the tax system emerges. The reason given for decoupling Tax Day and TAM Day from the budgets is to help parliamentarians and stakeholders to better scrutinise tax policy with the aim of achieving improved policy outcomes.
So what are some of the highlights or key points from TAM Day that ICAEW members should be aware of?
So as your question suggests, there were too many announcements to cover here. and I'll just pick out a few. So first of all, transfer pricing. The government has confirmed that it will consult on draft legislation in 2022 to implement a requirement to maintain master file and local file documentation, and this will be in line with the OECD's standardised approach. This requirement will apply to the businesses subject to country-by-country reporting. So those are businesses with turnover over 750 million euros. We've also been anticipating changes to the R&D tax relief regime. Now, there's quite a few changes here. So although qualifying expenditure is expanded to include licence payments for datasets and certain cloud computing costs, there's also going to be some restrictions to qualifying expenditure. So expenditure on subcontracted R&D will be restricted to work performed in the UK, and the cost of externally provided workers can only be claimed where the workers are paid through a UK payroll. There's also changes to improve compliance, and examples of this are needing to inform HMRC of claims in advance of making claims digitally, and for claims to be endorsed by a named senior officer of the company. There's also changes potentially coming for those starting out in business, and the government has published a call for evidence around the self-employed and landlords registering and deregistering from income tax self-assessment. Now, currently the date for registering for self-assessment is the 5th of October after the end of the tax year in which the liability first arises. And the call for evidence suggests this might be brought forward to a set time period after a business activity starts. Members operating in the private client market will be welcoming a commitment to no major changes to the inheritance tax and capital gains tax rules in the current Parliament, and this follows the Office of Tax Simplification undertaking reviews into both taxes. The government has, however, accepted 5 technical recommendations from the OTS's second report on capital gains tax. And from a ICAEW member perspective, the government has decided not to proceed with the proposal for compulsory professional indemnity insurance for those who provide tax advice. Now, professional indemnity insurance is already a requirement for ICAEW members, but there was a concern that this would increase premiums across the market. However, there will be a further consultation that the government will undertake to consider the case for moving further towards statutory regulation of the tax advice market.
A lot of detail for members to get their teeth into there, but for now let's move on to the continual process of the UK's exit from the European Union. The 1st of January 2022 marks the next milestone in the government's phased timetable for border controls, the introduction of full customs declarations and control. Could you explain for us what this means in practical terms?
Of course. From 1st of January 2022, traders must meet full customs requirement at the point of importation from the EU. Now, this means submitting declarations, paying VAT and excise duty where necessary, and submitting pre-notification of the import of animal products, although physical checks will still be conducted at the point of destination until July 2022. Another easement around the origin of goods will also end. So the rate of customs duty depends on 4 things, and one of these is where the goods originate. Under the UK-EU Trade and Cooperation Agreement, no tariffs or quotas apply to trade between the UK and EU, provided the goods originate in one of the other destinations. The importer has to evidence the origin of the goods, and this could be from the importer's own knowledge or the exporter providing a statement on origin. Now, when making a statement on origin, for some goods, the exporter may need to hold a supplier declaration as supporting evidence to confirm the origin of the goods. And between 1st of January and 31st December 2021, it's been possible to export goods to the EU using these preferential tariffs if the exporter was confident of the origin without having the supplier statements in place at the time of export. This easement ends on the 31st December, and supplier declarations must be in place for goods exported to the EU whenever that's happened in 2021. And then from 1st of January 2022, exporters issuing statements on origin will need supplier declarations if they require them at the time of the export.
Thank you, Lindsey. And more details can be found on customs declarations for EU imports and exports and on Tax Administration and Maintenance Day. You can find links to those on the show notes to this podcast and on icaew.com/insights. We're going to look now at local audit, with a particular focus on the market in Wales. And to do so, I'm delighted to be joined by Ann-Marie Harkin, Executive Director for Audit Services Audit Wales. Hi, Ann-Marie.
Hi.
Great to have you on the podcast. And Oliver Sims, Manager Public Sector Audit and Assurance at ICAEW. Hi, Oliver.
Hello.
Now, recently on ICAEW Insights, we ran a story about the crisis in the local audit market in England, with only 9% of 2020-21 local government audits completed by the 30th of September deadline, and only 5 firms conducting these audits. Oliver, can I start with you for a bit of background on the local audit market and how it differs between England and Wales?
Since the abolition of the Audit Commission, with the introduction of the Local Audit and Accountability Act in Parliament, it passed Parliament in 2014, local government audit has effectively been privatised in England and being carried out solely by private sector audit firms. However, in Wales, they took a different approach. And my understanding is Audit Wales carries out all the local government audit in Wales.
And as I mentioned at the start of this piece, there's growing concern about the local audit market in England. And last week, MPs on the Public Accounts Committee quoted ICAEW evidence, highlighting the need for urgent action to fix the issues in local audits and reporting. What can be done, and what's ICAEW doing in terms of its involvement?
There is a lot that can be done. ICAEW is working with key stakeholders and asking the UK government, the Department for Levelling Up Housing and Communities, to take urgent action to make the audit market more attractive and reduce the complexity of local authority accounts.
Thank you, Oliver. Let's turn to Ann-Marie from Audit Wales now. We've heard a lot less about the local audit situation in Wales than in England. Is this because the market's in a better place? And can you tell us how many local authority 2021 audits were completed ahead of the deadline?
Certainly, and I think as Oliver has said really, it's really important to first, I suppose, understand the differences between the audit models in Wales and England. So in Wales, the Auditor General for Wales is the auditor of the whole of the devolved Welsh public sector. So that would include central government, local government bodies and the local NHS bodies here. The Auditor General then has a pool of staff employed by the Wales Audit Office to support him in carrying out those audits. And he can also appoint private sector firms to carry out audit work for him, which he did do until the 2020-21 audit round. The decision that we took at that point not to use the firms was taken in the face of considerable market uncertainty, including actually the volume of work that we might need to do following the UK's departure from the EU. But it is a position that we keep under regular review here in Wales. But of course in England, since the abolition of the Audit Commission, as Oliver said, the equivalent local audit work is carried out by the large audit firms. And for us in Wales, we believe that the audit model provides us with stability and the ability actually to plan and work constructively with the Welsh Government and our audited bodies to put in place a structured and pragmatic audit completion timetable. And these relationships, I think, have very much come to the fore in agreeing the timetable for the 2021 audit round. Because of the challenges caused by COVID, the Welsh Government moved the completion and audit deadlines back for a second year. So the local government bodies had to prepare accounts by the 31st of August 2021 instead of the 31st of May 2021. And as auditors, we had to undertake our work and issue audit certificates by 30th of November 2021 instead of the 31st of July 2021. But in terms of the performance then against this revised deadline, 21 out of the 22 unitary authorities were signed off by the revised deadline. And the one that missed the deadline was as a result of a specific issue really that we identified during the audit, which is being worked through. So it wasn't a capacity issue. And although it wasn't the deadline in Wales, if we were to compare that, 41% of our unitary authorities were signed off by the English deadline of the 30th of September, which I think was a good achievement for us. All police, fire and National Park Authority audits were signed off by the revised deadline of the 30th of November. Just for completeness sake, to give you the full picture, all of our NHS audits were signed off by the revised deadline as well of the 11th of June this year. And all of our central government audits have been signed off by the target date. Although this is a bit of a more complicated picture to describe, as there isn't a single defined deadline for those particular bodies. So I think overall it's a pretty encouraging picture, but it's not one, of course, it's been without challenges. And I owe, as Exec Director, a huge thank you really to all of our staff who've helped us to make this achievable. I'm really, really grateful to them for the professionalism that they've shown throughout the period, really, and also to our audited bodies for the constructive way they've engaged with us. So a massive thank you, really. This would not have been possible without all of that, really.
Absolutely, and definitely under a great deal of duress as well. We touched on the COVID-19 pandemic and the ability to deliver audits on time. How much of an effect did it have on delivering these audits, and how have Audit Wales adapted for remote working?
Yeah, really good question. I mean, on the whole, I think we adapted really well to the pandemic, and as I've already said, really, delivered well against a revised delivery timetable. So our mantra throughout the crisis has been self-family work, as we've sought to prioritise the health and welfare of our staff and the staff at the bodies we audited. But I don't think we can underestimate for one moment how difficult it was for so many of us really to move to home working with a loss of immediate peer support. And I think for many of us as well, having to cope with the demands of, for example, homeschooling at the same time, I think that brought incredible pressure. As a mobile organisation, I think we were lucky. We were fortunate that we had IT infrastructure in place for staff to work from home. And we very quickly adapted to online Teams meetings and virtual working. Right at the very outset of the pandemic, we prioritised our value for money, our performance audit work programme, partly to avoid placing additional demands on audited bodies as they were striving to respond to the demands of the pandemic. And we also sought to focus on supporting the public sector in its pandemic response by sharing good and emerging practice through, for example, our COVID learning programme that we set up and ran during that period. And as I've explained, we worked with the Welsh Government to build some flexibility into the Audit of Accounts programme to respond to the many challenges of the pandemic itself. But there were definitely challenges as far as the audits themselves were concerned. We certainly found it less efficient in many ways, as we had to work out new ways of obtaining audit evidence. So, for example, obtaining date-stamped photographs or videos to verify assets. And then we were auditing, there were audit issues that we hadn't seen before. For example, auditing valuation uncertainty for much of the public sector estate and accounting for vaccines and PPE. But I think from my perspective, one of the biggest challenges we faced and still face is how we support and develop our audit trainees and apprentices. At Audit Wales, we've got around 60 staff training, and it's been tough for them so early in their career, I think, to be working in this way. I know from discussions with other audited bodies that we are not alone in this. I think there's a universal recognition really across the whole profession that developing, coaching and mentoring inexperienced staff online is really incredibly challenging. In line with Welsh Government guidance, we've opened up our offices in a limited and controlled way to provide extra support. But we are well aware that providing this support remains one of the biggest challenges to the way we have had to work. After 2 years of working in the way, I think we've seen a significant fatigue in our staff as well. But again, I know we're not alone in this respect. It's a common point of discussion between ourselves and the other UK audit agencies. And I think as we look forward, However the ongoing story of COVID unfolds, our overriding priorities have to be the welfare of our staff and the support and development of our trainees and apprentices, and really all other new staff.
Absolutely. Auditors in England have regularly reported that stretched finance teams have struggled to produce good quality draft financial statements or working papers. Has this also been an issue in Wales, and what advice would you give to a finance team struggling with the same issues?
Well, I think it has been less of an issue in Wales, actually. Generally, the accounts and the working papers we receive are of a good standard, although, as you might expect, there's always scope for improvement in some places. And I think we've developed very constructive working relationships with audited bodies, which does facilitate a smoother audit process generally. So, for example, in planning for earlier closing of local government accounts, we had worked closely with our audited bodies to show good practice previously and to reinforce the importance of the annual accounts as a key governance document. And we'd emphasise that the preparation of such a key document needs to be resourced accordingly. So I think we were starting from a relatively good place. During the heights of the COVID pandemic, we'd seen pockets of capacity issues, pressures, where accounts teams have needed to support the response to COVID, particularly maybe in services such as social care. But we've also seen reinforcement, I think, from directors of finance and audit committees about the importance of the annual accounts as that key governance document that I'm mentioning. This has helped to ensure, I think, that the accounts remain high on the priority list for our audited bodies. And in terms of the advice then that I'd give to finance teams, I'd say focus on what's material to the users of the accounts and focus your resources on those areas and learn from what went well or didn't go quite so well in the past. Within Audit Wales, for example, we undertake post-project learning after each of our audits in partnership with our audited bodies to reflect then on both how we and they can improve the process for the following year. And I think I'd encourage finance teams to do more of this themselves and to look for good practice elsewhere across the public and private sectors.
And I'm afraid that's all we have time for today. My thanks to all our guests, Philippa Kelly, Lindsey Wicks, Ann-Marie Harkin and Oliver Sims. Thank you very much for listening, and we hope you'll tune in next time with your new host, Philippa Kelly. Thank you everyone for listening and for your support, and bye for now.
We hope you enjoyed this episode. If you want to hear more from ICAEW, subscribe on Apple Podcasts, Spotify, or wherever you get your podcasts.